Good afternoon, everyone, and thanks for joining us. I'd like to welcome you to this Monday Minute Live Chat hosted by the Canadian Leadership Congress. Our topic today is global infrastructure, the substantial $94 trillion opportunity it represents, and of course, how Canadian pension funds can tap into it. To talk about it, I'm here with Chantale Pelletier, Global Head of Infrastructure and Private Assets with Schroders. Welcome, Chantale.
Thank you. Thank you, Caroline. It's a pleasure to be with you.
Oh, yeah, no, our pleasure too. And I want to start with the title of the session. Of course, $94 trillion we are told is needed to build out global infrastructure. Of course, that's a huge number. Can you tell me why it's so high and why do we need all this done by 2040, as the report also says?
That's a very good question, and it's the infrastructure is so huge in terms of opportunity. Over the fact that it's expected by 2040, the world population would increase by almost 1.5 billion of people on Earth. This obviously required a lot of huge spending in infrastructure to ensure good economies and good societies. There's a very important, well, a lot of trends on the market right now, but one of the important trends that we see right now is the ESG / sustainability. That is huge impact on the needs for investment in infrastructures. We have the United Nations that has set very ambitious sustainable development goals, 17 in total, which among them, those goals, there's climate actions, responsibility productions and consumptions, clean energy and sustainable cities, which all the subject and the requirement for the infrastructure spending. So it's a huge important amount of money that needs to be invested to support, well, the populations, the GDP and so on, but also those, let's say, sustainability. And this is a very interesting trends where we're going through those investments to change, to have a more cleaner world in the future.
Okay, so you've talked about sustainability, you've talked about some of the UN goals. Obviously, we know the opportunity is really big, but let's dig a little bit further into what it looks like to you. What are some of the big themes that you're seeing, either within, say, the sustainable investing umbrella or even beyond?
Well, it's in line with what I've mentioned in terms of sustainability. What, as you pointed out correctly, there's the three themes that it's very important. The energy transition is one of them, moving towards a cleaner world. In many countries have set some objective of the net zero emission target by 2050. So we're talking about electric vehicles, moving towards a renewable-based economy, batteries, storage, and also investing in energy efficiency. So that's a very important trend. There's also the digitalizations, which we've been living in, let's say, the pandemic situations for more than years now. So we all realize how important it is to have a reliable internet connections and being able to have Zoom or Teams, rely on those let's say connections. So the COVID has accelerated those let's say trends also. And a third one will be the mobility. So in terms of transportations, getting around, the low carbon aspect of it. So developing those and making an investment towards the low carbon mobility is also a key theme that we're seeing on the market.
I really want to talk about kind of which areas of the world are a little bit further ahead in some of these trends, say mobility or say ways to be more interconnected. And what can investors do about that? What's the opportunity for them?
Well, in terms of, well, taking maybe one example where we see more European countries ahead in transportations, for example, in terms of mobility for passenger. where we could see a lot of, let's say, the train, the mass transit is really developed in Europe. Where the other, what we could learn about it is to just look at how they structure the market, how they provide that mobility to a city, to a region, and they've been developing that for many years. So it's and it's in line with the low carbon mobility in terms of the, let's say, the going forward, the net zero and so on. So that's one of the trends that we could really learn about, let's say, in Europe, where we could, let's say, take example for, say, to develop those, let's say, mobility.
Right. So Canadian pension investors clearly have a focus on climate change and accounting for that within their portfolios. What role can infrastructure play within their portfolios to help them meet those climate goals?
Well, infrastructure per se is an asset class where in the sustainability and ESG and climate change is in the center of it. So as I mentioned, in terms of energy transition, so you could make let's say, investment towards this net zero objective of 2050 in terms of being an investor and putting at work money, private capital behind that objective, that could make a very important difference. So it's for Canadian, over and above the, let's say, the fact that the infrastructure is a very interesting asset class for, as a portfolio perspective, as an investor, the risk profile. The fantastic aspect of it is you can make a difference. You can change and you can build that objective towards the net zero -2 degrees.
Yeah. Now, you hear a lot about sort of dry powder in the space and the search for good infrastructure investment opportunities. Of course, Canadian pension funds are very keen to boost their exposure to this asset class. Like, how crowded is the space right now, and how realistic are some of these goals to boost exposure to the asset class?
Well, the space is crowded. Well, the infrastructure from 2000 to today, to let's say 20 years from then, we started with almost zero as an asset class in infrastructure, and we are at around 655 billion-ish. In terms of, let's say, money at at work in the space. So it's becoming more and more crowded, and there's, let's say, different strategies in debt, equity, core plus, and value add, and all of those type of strategies, and a lot of money in terms of dry powder. You ask, let's say, the questions. There's maybe 220 billion dry powder worldwide, let's say, targeting that space. It's a lot, let's say, crowded, but compared to the, let's say, the need and the potential of the, let's say, the different, let's say, capacity in terms of needs of investment, there's still a gap. There's still a gap financing there to finance, and there's also a gap towards the, let's say, the government today, with accelerated by the fact that the COVID also make that gap for the government even higher. When I'm talking about the government is because some of the infrastructure still belongs to the government or a municipality or a region. So there've been, let's say, the capacity for them to support the growth and the investment and the capacity to invest. It will be a challenge for them. So then we need to work towards, let's say, a partnership with the government, with the private capital, to make sure that we addressing the right and making sure we invest towards the right project in infrastructure. So yes, it's crowded. Yes, there's a lot of money and it's increasing, but there's still a lot of projects to be financed.
That's great. In terms of crowding and valuation, I mean, I guess that's the other thing you have to look at. If it's a crowded space, everybody's chasing deals, it could theoretically push prices up. How do you navigate that?
A good question. In terms of pricing, obviously the pricing increase in terms of return decrease over the years, driven by also the fact that the interest rate was, let's say, lower and lower. So that didn't, let's say, emphasize the trend. What we need to have, and at Schroders, it's very important. The approach that we take is a long-term approach. What kind of angle we could have, what kind of expertise we could bring. In a crowded space or where you have an other investor, it's just the, let's say, the money or the capacity that you have that talking is what you could bring to the table and what you could make as a difference in a project or in a company. So the expertise and the angle that you have that we could bring to the let's say, our firm, it's key in that market.
Okay, that's a really good point. Obviously the opportunity is global, and there's a lot of infrastructure projects happening around the world. What regions get you the most excited right now?
The most excited, well, I would say the most important one is still Europe, following, as I mentioned, following but not North America. There's a lot happening on sustainability in those, let's say, developed markets. Again, it's an opportunity. We see it as an opportunity, and also, well, assessing the risk for let's say, the climate change. For us as an investor, but also a lot of opportunity to make that difference and to work towards the net zero, which is a corporate, which is a Schroders corporate objective that we have. So in terms of opportunity, I think it's continuing to be driven by what is our convictions, what we could, who we are as an investor, and what kind of changes difference we want to make.
Well, and I guess part of it, you talked about the role of government, et cetera. I guess part of it would be tied to your understanding on the ground of what's going on in various regions of the world, right?
Yes.
What about areas like Asia? That's an area of the world that is growing at a rapid pace. India, are there robust opportunities there as well?
Yes, of course. There's a lot of opportunity, and you touch a very important point, is the local aspect. Let's call it like this, because, well, Asia is a it's embedded behind that is a lot of countries, a lot of different ways of doing business, a lot of different realities. India, Singapore, Hong Kong, whatever it is, it's the understanding of the, let's say, the local flavor is becoming key. But yes, there is a lot of opportunity, and developing what I mentioned in terms of developing an angle, it goes with let's understanding the ecosystem, understanding the different stakeholders, because in infrastructure you are also in line and in partnership with regulator, with the community, with consumer, with you're touching everyone every day with infrastructure. So you need to understand that reality. You need to understand the local aspect of it to make sure that as an investor, you consider those as elements also over and above, let's say, the climate, the ESG, and so on, and having the let's say, the good risk return profile. You need to consider that.
Good point. On that note, what keeps you up at night when it comes to infrastructure investing? I mean, clearly you have your road bumps and your challenges and your risks in this landscape. What are some of those risks you see right now that you're watching?
It goes with one of your questions in terms of and in terms of the more crowded aspect. So and the long-term perspective. I must admit that not necessarily keeping up at night, but let's say we need to stick with who we are as an investor at Schroders, but having the long-term perspective and making sure that we are not investing to invest because we need to deploy money. So that's let's say a risk that, and more and more investor, more and more willing to deploy capital because of the attractiveness of the asset class, are willing to just pushing hard to put some asset on their balance sheet. So that's one risk. And the other risk that I would say is in line with, again, with what I've mentioned in terms of forgetting the fact that when you invest in infrastructure, you invest in life of people. So you need to consider also that aspect and understanding that all the stakeholder. So you need to have that in mind. So it's not a risk per se, but it's something that if you forget about it and you're managing the asset differently, it could become a risk for an investment, an
Yeah,
investor.
for sure. Well, beyond the risk picture, what does infrastructure look like in a Canadian pension portfolio? Like, where do you see it fitting from an asset allocation standpoint, and what role should it be playing?
Well, the infrastructure is an asset class that is interesting for the pension fund. Very interesting for the fact that it's normally inflation linked. So, so you have a certain level of protections if, let's say, the inflation goes up. Let's say we have that diversifications. If you include infrastructure in your bigger portfolio, it's a diversification that you bring to your portfolio. So local relations with other asset class, I mean. And there's the, let's say, the long-term perspective, the link with the liabilities that you have as a pensioner, a pension fund. And the risk return profile is very interesting in terms of having, let's say, a percentage of return higher for 1 unit of risk, if you see what I mean. So in terms of the profile and the resilience of it, and we've seen that it was a very true let's say, test with the COVID one. Yes, the transportation asset has been hit, so that's for sure, but there's other that proved that to be very resilient in terms of, let's say, the pandemic, or also the economic downturn that we've seen in 2008 and other downturn that we've lived in and we had to live in.
Yeah, I want to pick up on that actually, and this idea of resilience. There's been obviously a lot of government stimulus. Policymakers have had a really big role, obviously, since 2008, and kind of using what levers it has to add liquidity to the market. As you look ahead, you look at factors like possible inflation, and then down the road, rising rates. How does that impact the infrastructure space, and do pension funds need to have an eye on that?
Yes, that's true. I think it's like with on a case-by-case basis, you need to assess the risk-return profile. So what is the, let's say, the aspect of, let's say, the resilience of the asset, and what are the risks and how you manage it. But obviously, we need to have an eye on what is economic situation that will, let's say, evolve over time, because we're taking always a long-term type of perspective when you invest in infrastructure. So you need to see, okay, if there's, let's say, inflations tomorrow morning, how the portfolio or how this particular investment will react. Is it protected or not? And then you analyze, and it's like with the let's say, the pricing, and then what kind of valuation you could put. Normally the infrastructure space is let's say, it's a capital protections in a certain sense. So let's say, affecting maybe your return is a little bit. So it's where you analyze the interest rate increasing, inflations, or other type of risk. You could have merchant risk coming on in terms of renewable energy, but the let's say, the resilience of it is always a question of how you price it, how you analyze it, and also how do you you protect yourself in a different way from those, let's say, risks that you see in the specific situations.
Great. I guess another question I have is I want to bring the opportunity to life a little bit, and we're talking about these important projects that again will address carbon zero, and those targets. What do those look like? What are some of the big projects happening out there right now that speak to some of the themes you've talked about?
Well, the most important one is to getting more renewable in the energy mix from, let's say, a lot of countries, the willingness to increase the renewable. And I'm talking about, let's say, a lot of, let's say, solar, wind, offshore wind, onshore wind, and the new technology too. So in terms of all the, what happening in terms of hydrogen, it's very, let's say, it's at the beginning of a market, but how it will evolve and so on, that's very important to follow. And also what is important to not forget is how we being more efficient, energy efficiencies. So how we can be more efficient with the infrastructure that exists today. So we often talked about the, let's say, the new infrastructure, building some, let's say, renewables and so on and so forth. But the questions for me and for Schroders is also to look at what exists and how we could reshape the infrastructure, existing infrastructure, to get to the net zero. So in terms of example to the net zero carbon is also to consider refurbished home and being, let's say, saving some the energy that you consume, or in terms of mobility, how we could make it more low carbon in terms of, let's say, electric cars, electric buses, or the alternative mode of bicycle in a city. So let's say the smart cities approach, or being more, let's say, build around how we could build a city to be more, let's say, energy or mobility that is more cleaner and also more sustainable type. So that kind of example that we could think of in terms of, let's say, the roadmap towards the let's say the net zero. But there's also, and one of the aspect that we haven't touched base is also the waste and the circular economy, how you recycle things, let's say the recycling aspect, but what we could do with, let's say, the plastic, and can we evolve the, let's say, the type of plastic we're talking about. And I'm going a little bit outside of the infrastructure, but that's the, let's say, the thinking also.
That's great. And I guess that thinking, is that roadmap getting a little bit shorter, given, the geopolitical sphere and, some of the political discussions sort of steering a little bit away from fossil fuels?
Well, there's an acceleration, and I think in terms of their urgency to act, to be honest. We put the net zero carbon 2050, but I think it's starting today, and we're probably late in this objective, to be honest. So I think it's the urgency, and it's good to see that people are going through that path, and so there's a movement towards that, which is very good. But there's certainly an aspect of before 2050, we need to act right now, and it's urgent to act.
That's great. And on that note, that wraps our questions for today. And I would really like to thank Chantale for joining us and for the excellent comments. Thank you so much. I'd like to thank all of you who are joining us for today's Monday Minute. Don't forget to send us your questions, and we'll get right back to you with Chantale's response. She is on hand to answer these questions. And thank you so much for joining us, and we'll see you next time.
Thank you for having me.